In this video, I want to show an example of me trading the DAX, first being short, then being long, and then being short again. Now, what I want you to know is that everything is time-stamped, everything is documented, everything is in real time. This isn't after the fact. I'll even show a snapshot of my brokerage statement just to, verify that this is actually really bona fide trade. If you want to follow me on a daily basis when I trade, then you can go to my website tradertom.com and click on live trading, or you can contact me via Telegram. But you need to download the Telegram app, and in there, if you do that, you'll get a message from me with a link, and that link will basically take you into my private channel where I post my educational pieces, my entry signals, and my exit signals all day, every day. So as we go through this chart here, this is what happened this morning. So what I've done is to display this on a 1 minute chart. Now I don't usually trade on a 1 minute chart, but I thought for the purpose of this educational piece that a 1 minute chart would be a really good idea. Simply just because then you can really see on a really minute scale what I'm doing. So the first 1 minute bar is bullish, and I decided that because I'm fundamentally bearish today, which turned out to be an absolute correct call, and that was on the basis of the daily chart, I would short below the low of this particular bar there. So I wait. The next bar is negative, but I don't actually get a move below, so I decide not to trade until I actually see the market trade below. And then at 8:04, I finally see the market move below the low of the first minute. And I sell short the DAX at 14,378. As the low of 14,380 gives in, which is this low here, I see the DAX go to 76 really quick. So I take a deep breath, and I'm sure that you are often finding yourself in the same situation where you have a level and you want that level to be breached or touched, and then the market perhaps moves a little bit further than you wanted to, and you just take that deep breath and going, should I just get in now or should I just wait a moment? In this case, I waited a moment and I got a slightly better fill. Not spectacularly a better fill. That actually reminds me of something. A friend of mine, he said, don't be a dick for a tick. So that's probably a good point to remember. The following 1 minute bar trades below the low of the bar that breaks the initial morning low. And that's a good point too. That's good because at this point, what I want to see is weakness. Now, I haven't added to my winning position just yet. I enter at 78, and at best down here, I am 25 points in profit. So I move my stop loss down to 14,395. Now remember, my entry was 78, so I haven't got a stop loss at break even just yet. And as you'll see, I'll get stopped out in a moment, although I obviously don't know that at this point in time. I wish I had, because then I would have moved my stop loss to break even, or I even wish I had moved my stop loss to break even. Over the next 2 minutes, the DAX bounces, and I get stopped out at 14,395. I immediately see this as a mistake on my part to have moved my stop loss down, so I sell short the DAX again at 14,393 with a stop loss about 20 points away. That would be proved to be a bad idea to do. At this point, I haven't been stopped out yet, but one thing that I notice on this bar here, even though it's a 1 minute bar, is the fact that this resistance that we would see up here, defined by the first 2 minutes of trading, it seems to me as that's being respected, but only for about 30 seconds, after which the buyers are immediately pushing the DAX back up again. So I already prepare my trading ticket to go long, because I see this last bar as an attempt by the bears to sell off the double top, but the bulls are immediately pushing the market back up again. You have to be mindful that everything you see here is through the prism of a 1 minute chart. I don't normally engage with a 1 minute chart unless the markets are hyper volatile, and they always are during the very, very early morning sessions. There are many ways to tackle a volatile index at the open. I approach it from a pit trader's point of view, meaning that I want to get in on whatever move is coming, because I know that's going to be a move one way or another. So as you go through your research, you know that when you're trading stock indices, there will be a move of some significant proportion. It's just a question of if it's going to be a fake out first, are they just going to test the lows before they take it back up again, or in this case that was happened today, they just wanted to take it up before they take it back down again. I remember a trader, friend of mine, colleague, back in my city days, he said they take them up to take them down, or maybe he should have said they push them up to take them back down again. So it's worth remembering that at times the market will just play games. At this point here though, I established that I want to be long the market. So I already begin to buy here at 16 and at 20 and at 33 and at 35. And at this point here, it's actually looking pretty good. I have an accumulated 48 DAX points in profit. But I think if the market really is doing this pattern that we're seeing here, there is a good chance that we're going to see this market push even higher. Maybe up to about 14,500. I looked at the daily chart, and the reason why I was bearish when I walked into the trading session was because the daily chart had held 14,370 4 times over the last 4 days. And so I would begin at this point here, beginning to wonder, well, maybe that daily low is going to hold and we are actually going back up again. I was skeptical about it, but hey, you know, one thing is that you're skeptical, you have a trading idea. Another idea here is, well, I'm not in the markets to be proven right or wrong. I'm in it to make money. And whatever may preconceived and conception I had before I entered the market, well, one of the things that I firmly believe in as a trader is that you have to cultivate a very flexible mindset. There's no point in dogmatically holding on to a belief if that belief is not being, shall we say, validated by the market. Otherwise, you're just a stubborn mule, and mules don't really tend to make money in trading. At this little correction here, which is a very minor correction, I am within 5 points of being stopped out of 2 trades. Those are the ones that you're seeing here and here. But I luckily escape, and the DAX charges higher again. So at this point here, I'm very hopeful, only to be somewhat distressed that the market again is selling off on this double top. Every position is £200 a point, and my average price is 14,432. At this point here in my Telegram group, I make a note asking people, what do you think is going to come first, 14,440 or 14,400? And I get a sort of a mixed review of people thinking, it's going to be 40 or it's going to be 00. And at this point, of course, it's trading around the 34, 35 area. So I would have thought that 40 was going to be the one that came first, but I was proven to be wrong about that. At this point here, I am stopped out of 2 positions, but then the market charges higher once more, only then to reverse back down again. And this point here, I think, is a critical point. At this point here, at the 33rd 1 minute bar, which is just after the half hour, I have a very strong sense that this market is weak. Now, if you go over here and you look at the 5 minute chart at that particular point in time, you see that we're now beginning to trade below the prior candle, below the prior candle before that. You have an inside bar here, and actually you are trading at the lowest point of the last 1, 2, 3, 4 bars. To me, that is not a good development. In a moment, I'm going to get stopped out of my positions and taking a loss. But what I'm seeing is a market that twice attempted to get above 14,440 and hold 14,400. When that failed and I was stopped out of both short positions at 390, I knew I had to get short as quickly as possible, which is why I posted this message here. I will do the stats later. Right now, I just need to get short the market. And so that's exactly what I'm doing. My first short is at 385, and then at 376, and then again at 363. So, as you can see, there isn't really any magic to it adding to your position. Yeah, sure, you need to have a firm belief in what you're doing is the right thing to do. But it's not that I have some parameters that I just follow dogmatically, saying I'll short every 5 points lower and lower, or I will short whenever the bar closes. I simply just follow the momentum, and as the market begins to move in my favor, I will add as and when I see fit. In this case here, I'm adding 3 times. Over the years, I have conducted an enormous amount of research into price patterns. And it's not because I I'm hoping to uncover some new pattern that is the holy grail, or something that no one else has ever uncovered. It's purely to train my eyes to see the things in real time. I had a mentor a long time ago who said that you only see on a chart what you have trained your eyes to see. And he was a particularly good trader. So you may very well argue, well, there's a low here and then there's a higher low here. But to me, this is basically a double top. Here's the opening, and we're beginning to trade below that, meaning that all what I'm seeing here was perhaps just for nothing. And so I'm beginning to add aggressively to it. Here's a different perspective of it. Here's my entries. Here's actually my broker report. The prices here don't quite correlate. That's because I traded at 88, but when I came to post the signal, the market was trading at 85. And I actually executed 2 trades here, but I couldn't press that quick enough. So the second signal was actually 76. My price was better, but I didn't post that in the group, because when I post signals in the Telegram group, I always make sure that when I press that button for a signal that goes into the Telegram channel, that is the price that I'm seeing right there, right now. So it may not necessarily have been the price that I executed at. Mostly it is, but it could be a point or two difference, as it was in this case. And in this particular case, when the market was very fast moving, there was a 10-point difference. But I didn't post the 87, I posted it as a 76. And then you have another entry here at 74, which is probably more aligned with this one here. And then you got 63. So there's 5 trades here, so they're not quite the same. And I added twice at the same price level, technically actually adding to a losing trade there. And then again at 46, which actually was posted as 44. At this point, I was down about 150 DAX points early in the morning. And when I had this idea that the DAX was going to go back down to about 14,300. Actually, it's trading at 14,000 and almost 14,000 evens, not far off right now as I'm looking at my monitor. Is trading at 14,150. So I let a lot slip. I mean, I had other trades. It was an incredibly profitable trading day, but this particular trade that I'm discussing right now was probably more driven from the perspective of I lost a heap of points early on, and now I'm making even more. And I think that was in part what compelled me to take profit, because no sooner had I taken profit before the market actually fell much lower. It wasn't the only trade that I had going. I also had a trade in the FTSE. The FTSE is very often slow to catch on to what the DAX is doing. And in this particular case here, it puzzled me that although the FTSE had fallen, that it hadn't fallen more than it had. So I decided I'm going to short the FTSE here at 83 and then again at 77. And then I had a bit of a wait where the market went against me. But then we finally began to trade below this low here. And that's not even my requirement. My requirement are these long freestanding bars here. Those were the ones I took comfort in. So I shorted down here, and then I closed the whole lot just a tick or two further down. So the purpose of this video was to illustrate to you how you can add to your winning position. And adding to the winning position has become somewhat of a religion for me, because I find it so important to act as an antidote to those temptations that you have, that where you want to close your trade prematurely or before the market has really gotten going. Now, I am actually a bit of an offender saying this, because I closed my DAX trade at 14,300 only to see the market go another 200 points lower without me. So even a seasoned trader like me can every now and then get it wrong, and spectacularly so. Now, while I got you, I've actually written a book about the whole concept of trading psychology. It's not a book about technical analysis, because we have plenty of books about technical analysis, so we don't need another one. Now, this is a book about the mental aspect of trading, which is very much epitomized by the trades that I've taken today and seen in the Telegram channel. It's going to be published by Harriman House, and it's going to be launched in June 2022, so a couple of months away. And the title is Best Loser Wins, while normal thinking never wins the trading game. And the argument for this title is that most people that are engaging with the markets are smart people, yet about 90% of all people that trade lose money. That, to me, that argues that even if you are a well-reasoned and an articulate individual with a good strategy, unless you begin to think differently about how you trade, and in particular how you take losses, you'll never make money consistently in the market. That's why it's called Best Loser Wins, because it's the individual that has the best ability to take his trades off quickly when they're losing are the ones that are going to survive this game. If you want to follow what I do, then go to tradertom.com and click on live trading. Download the Telegram app if you haven't already done so, and then contact me on @TomHugart, or you can also email me for instructions at hello@tradertom.com. My track record is public record in case you're curious about that. I think that's it for me. I hope to see you there. And if I don't, and this content may not be evergreen, but have a lovely Easter 2022. I'm personally going on holiday, so I might not be around much for this Easter. You take care now. Bye-bye.